Hello, this is George Beiruthi from FS Securities. We're a stockbroking firm on the Gold Coast in Queensland, and this is actually a program where I'm going to bring you up to date with what's going on in the market, whether it's the US market, the Australian market, and show you a bit about ourselves and who your presenter is. So we move to say, first of all, we are an Australian company based on the Gold Coast, a stockbroking firm, a one-stop shop you may call, where we can actually provide information, education, or trading. And when it comes to trading and investing, we have shares, options, foreign exchange, commodities, CFDs. We have more or less, like I said, a one-stop shop. The only thing which we haven't got is real estate. A little bit about myself. I've had experience in trading and investing for over more than 25 years. And of course, I've had some good successes and some failures. And of course, that experience, despite I've got several degrees and master's degree from various universities around Australia, it is actually the Hard Knock Institution that told me a little bit about how to be successful in trading and investing. We run education programs, and everything that I've learned throughout my journey is presented in the programs. Okay, well, let's talk about why we believe the market is heading south, and how do we define a bearish market. Well, if we're talking about bears and bulls, first of all, let me tell you that we don't mean we are in a financial zoo and which animal is more active. Bear market indicate that the sellers are in control, albeit at a low volume and low participation. How often we hear analysts predicting the market, that is the result of companies, and when the market outperform or underperform the stock, or the stock underperform or overperform the market. We end up usually in the opposite direction. So first of all, let's see what the US economy is going to dictate to us, whether we are in a bear market or not. The US economy is looking great according to statistics which include GDP growth, lower unemployment, higher inflation, and hopefully wages may be rising to meet the inflation. And the stock market loves positive growth, which ends up with higher profitability for companies. And a bear market is the opposite. Stocks go down, prices go down, and usually unemployment goes higher as well. So why am I predicting we are in a bear market in the United States and the rest of the world if the global economy is booming at this stage? The answer is, well, is the market heated up and already includes all the positive factors that we already witness according to statistics? I may predict that we are at a peak of the bullish market. We also need to view if price-earning ratios are well above average. We don't know how the US-China trade war will escalate. Both countries want to resolve their differences. However, Trump is not, I don't believe, smart enough to understand the Chinese culture. President Xi has the upper hand and China is a lot richer than the US. The latter has debt of nearly $30 trillion, and as interest rate may be rising either in December or beyond December, we're going to see that the US will have greater debt. So if we talk about, there could be also some psychology. If the market is actually going to head south, we might see that the psychology of the United States markets after 10 years rising, it must be time to take money out of the market. If the US market drops by 20% or more over 12 or more months, then we will catch what we call more than a sneeze. Is it going to be pneumonia or is it going to be severe cold? Any case, we need to stand by, because what we see that most likely the market is going to respond in a way to take profit out of the market so they can find an opportunity to come back in. Okay, so as I said, there is a heated market perhaps. The price earning ratio will dictate to us where we are or not, and the trade war and the psychology of the traders that will eventually dump the market. I'm going to show you a couple of charts where we see here there are a lot of lines, and for a person that hasn't seen a chart before and showing the indicators on the chart may be a bit confused. I'm trying to make it as simple as possible. In the middle of the chart we have an orange line. That orange line represents the 50-day moving average. A moving average, it's actually an average that moves every day. An extra line goes in and one is taken out at the beginning, and then you work out the average, and eventually you end up with a line representing on a continuous basis the 50-day moving average. The pink represents the 100-day moving average, and the black line that you see in the middle of the page is the 200. When one crosses above or below the other, then that's a bearish. If it comes from below to move across on the top side of another one, especially the 100 over the 50 or the 200 over the 100, that indicates a bullish market. We are likely to see that the trend is moving the opposite direction. That is the 50 crossing below the 100, the 100 crossing below the 200. And that's an indication that the market is bearish. We have also other indicators, the stochastic and the parabolic stop and reverse. And at the moment, we can predict that the US market is likely to move between the black line, represented by 25,000, approximately 25,000 points, and the pink line, which is about 25,500. That's for the Dow. And that is going to oscillate between the two lines for a while until the market will determine whether it's going to go up or down. And I believe we have here a high line, and then we've created another high point. So lower high and lower lows indicate a bearish market. So we expect the market most likely to go below the black line, the 200, and head towards the Bollinger Band, and then obviously then we will see how the market will respond. The next chart is the Australian market, and again in here it's a lot more bearish than the US market, because the 50-day moving average crossed below the pink, which is the 100, and the 100 and the 200 are more or less converging towards each other. That is very much a bearish signal. And if you can see some red dots here where the cursor is, that is what we call the parabolic stop and reverse. And being above the candles are the red and the green sections here. The red represents the bearish day, the green represents the bullish day. Bullish means open low and close high. Bearish period means it open high and close low. And the combination of those bars or candles together, they give us the indicator, and at the moment we can see the indicators are all bearish. We run courses on a regular basis, and these courses will teach you how to trade the market by reading those signals, and they're not hard. If you can read a street directory and can make a distinction between the white roads versus the black roads versus the green roads, they all have significance. The same thing, the interpretation of the technical chart for a particular stock or a particular index or a particular foreign exchange, it's the same thing. We teach you how to read them. We also, every day, we present you on the website some recommendations. And at the bottom of that particular slide, you can see the XJO, which is the ASX 200. This week, from the last week performance, we've gone from bearish bull, according to whether you are an investor, that is long term, or the bull, which is a short term. Now we have 4 bearish signals for all the type of clients, whether you are an investor or a trader. So that's the first signal this week to show us that we are in a bear market. A little bit about ourselves and where to contact us. If you want to reach us, this is our phone number, 1300 928 985 if you are local in Australia. Otherwise, you can write to me. My email address is george@fssecurities.com.au. We are available here in Southport, Queensland. This is the Gold Coast. And we are happy to help you. All you have to do is contact us if you need some help. So anyway, we finish off now and we say have a good day and enjoy trading.